bank fixed deposits or term deposits, as it is called in certain countries, is a preferred investment option for many investors due to fixed returns and relatively low risk. Such investors are always concerned about ever diminishing interest rates. What if I tell you about an investment option that yields much higher return compared to bank fixed deposit? Of course, higher returns comes with higher risk, right? Well, that depends on what you perceive as risk. Let's consider an example. Fixed deposit returns are higher compared to savings account due to the penalty imposed on premature withdrawal of fixed deposits to deter investors from using them as high interest savings account. An investor who is not sure whether he would need the funds prematurely or not will consider fixed deposits riskier than savings account, although the capital invested in both of them is equally secure and the returns are guaranteed. Of course, assuming your bank doesn't go out of business. Today I am going to discuss how can we invest in bonds or debentures which yield much higher returns compared to fixed deposit with almost same amount of risk. Before we start though, if you are new to our channel, please consider subscribing to get notified whenever we upload a new investment related video. So let's get started. So, what are bonds and debentures? Any private company, financial institution, or government organization can raise money through either equity financing or debt financing. Equity financing involves giving up a part of ownership to access fund without any obligation of repayment, whereas debt financing is essentially a loan with an obligation of repayment with interest. Bonds and debentures are essentially debt financing instruments through which organizations can raise money from individual investors. Cool, isn't it? So, what is the difference between bonds and debentures? We often use the words bonds and debentures interchangeably. In fact, in many countries, bonds and debentures are simply called bonds. There are two minute differences between the two where they mean different things. Firstly, bonds are always secured, whereas debentures can be both secured or unsecured. A bond or secured debenture is exactly same as secured loan. They both are issued against a collateral, which means that in case the organization that issued the bond or secured debenture is unable to repay the money will be repaid by liquidating the assets of the company. Secondly, bonds are always non-convertible, whereas debentures can be both convertible or non-convertible. This means that bonds can never be converted into equity shares, whereas certain debentures can be converted into equity shares. So, what are some of the types of bonds and debentures? There are several ways to classify bonds and debentures. As discussed earlier, they can be both secured or unsecured. Unsecured debenture usually yield higher returns due to higher risks involved. You can also classify them depending on whether they are convertible, non-convertible, callable, non-callable, puttable or non-puttable. A callable bond or debenture allows issuer to redeem them before the stated maturity date, allowing them to pay off their debt early. Companies often do this when interest rates in the market falls, allowing them to restructure their debt at lower interest rates. In general, callable bonds yields higher returns as compared to non-callable ones. A puttable bond or debenture allows bond or debenture holder to force the issuer to repurchase the bonds at specific rate before maturity. The repurchase price is set at the time of issue and is usually equal to the face value of the bond. In general, putable bonds yields lower returns as compared to non-putable ones. Broadly, there are three main types of bonds and debentures: government bonds, private bonds and debentures, and tax-saving bonds. We are going to discuss in detail about each of these in our future videos. So, let's discuss the returns you can expect from bonds and debentures. Returns that you get from bonds and debentures depend on different factors, including the type of bond, the credit ratings of the bond issued by credit rating agency. The returns from bonds and debentures can vary from as low as 5 to 6% on tax-saving bonds and as high as 15% on unsecured callable debentures. While investing in bonds and debentures, you can choose whether you want the payment of interest monthly, quarterly, yearly, or at the end of maturity period. I guess you're wondering, how can I invest in bonds and debentures? There are several ways to invest in bonds and debentures. To directly invest in bonds and debentures, you need a demat account. You can invest in bonds and debentures through commercial banks or by directly applying to the issuing organization. Private bonds and debentures are often traded on secondary markets. So, you can also invest in them through your broker with whom you have a trading account. Alternatively, you can invest in debt mutual fund who invest the capital in debt market and give fixed returns. The major disadvantage of investing in debt mutual fund is 1 to 2% management fees charged by mutual funds. However, for those who do not want to operate a trading account, it is a good alternative. So, what are some of the things that you should check before investing in bonds and debentures? First and foremost, you should check creditworthiness of the issuer by checking credit ratings of the security. Risks of untimely payment of coupons, which is nothing but interest, or non-payment of principal at the time of maturity increases with poor credit ratings. Although credit ratings gives fair idea of the risk associated with an investment, credit agencies sometimes are late to update their ratings in response to changes in circumstances. One of the best examples of this is the recent case of DHFL. So, it is essential to check the financial health of the issuer along with checking the credit ratings. Some other factors to consider before investing in bonds and debentures are maturity period, coupon rate, which is interest rate, and the type of bond it is. We will talk about all these factors in detail in our future videos, where we will talk about a particular type of bond and debenture investment. If you like this video, please give us a thumbs up and also share the video with your friends and family. Also, don't forget to leave your feedback in the comment section. Thank you.